All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street from Main Street. Starting off the S&P 500, you can see we had a wild and exhausting week. Only 4 days of trading, but wild nonetheless. So Sunday night, or I should say Monday night, the rhetoric kind of ramped up around Russia. And we opened lower here on Tuesday. Market tried to rally up, couldn't. And then I really just couldn't find a bottom here. And then on Wednesday afternoon, I did my video and I said, look, the market really just needs to gap down and it really needs to flush out any of the weak hands here so that the market can put in a temporary bottom here. And that's exactly what happened on Thursday. We gapped down on the news that Russia had indeed invaded Ukraine, and there was pretty much kind of a mass panic situation going on. We look at the E-mini futures here. You can see we got all the way down to 4,100 there, and I pointed this chart out that night. So we had this 20-month moving average here, and we had this kind of topside trend line going all the way back to 2018. That essentially got tested here on the E-mini, and we were able to rally back up. Market did put in a bottom, and essentially what happened was it was kind of a sell the news by the rumor, or excuse me, a sell the rumor by the news type of event. The analogy that I used on Thursday and Friday was essentially the market had kind of swallowed the biggest pill. It kind of got that out of the way. And, now that the uncertainty is out of the way, the market can kind of put in a little bit of a base and rally up. Now, that doesn't mean that the market is out of the woods by any stretch of the imagination. I still think there's going to be a lot of turbulence going into the quarter two here of 2022. But, for the meantime, I think we have put in some type of a base here. You can see a lot of those stocks that I was talking about last week that were super beaten down: PayPal, Square, Zoom, Roku, Netflix, Facebook, stocks like that I've been talking about that were really beaten down. I said, hey, if you got, if you're smart and you want to, pick at some of these, there's some opportunity there. Buying fear definitely works. And I said, once these stocks get a bid, they're going to rip faces off. And you can see that definitely happened this week. I mean, Etsy up 16% here, Square up 25% today off of earnings. PayPal put in a big bottom here. Take a look at IGV Cloud Software. Look at that move yesterday. These cloud stocks have been absolutely hammered lately. And, that's what happens in bear market rallies. They can be spectacular and they can be pretty much awe-inspiring. And that we had nothing short of that yesterday when that market gapped down and finished positive. The triple Qs actually were down over almost 4% in the overnight here Thursday night. And they finished up over 3% on the day. So basically a 7% swing on Thursday, and then some follow through Friday. But again, market putting in a bit of a short-term bottom here. You can see the triple Qs went down, tagged that 100-week moving average, and that held as support, also cut through the monthly. We do have one more day left in the month of February. And so assuming this holds, the market could be safe, at least in the near term. There was a lot of volume in the market here. You can take a look here on the daily. They've defended this area here. Look at the volume there on the triple Qs. You can see the volume there yesterday. Same thing on the spiders. They've defended that 420 area. So it's clear that is a line in the sand right now for the market. Interestingly enough, we look at the Russell 2000 here. Russell 2000 actually only made a double bottom, whereas all the other indices pierced through that double bottom. And the IWM did pierce through it by a couple of pennies, but the other indices made significant lower lows here, and the Russell's actually held up okay. So interesting. Russell is a kind of a risk-on asset or risk-on indice, and to see it double bottom there and actually outperform a little bit is definitely interesting, to say the least here. So Dow Jones also on the weekly kind of defending this purple line here and this gap fill. So again, market's putting a line in the sand in. For the meantime, I don't think they're anywhere near out of the woods, but a nice showing and a nice relief rally. Market, buyers finally coming in and shorts covering and taking some profits. Anyways, let's look through some sectors here. So semiconductors hitting that double bottom, just getting below that. So that 250 area is going to be support right now. Now it'll be interesting to see if we start making lower highs. But in the meantime, it did hold up okay. We just looked at IGV. In fact, on Wednesday, I said the IGV looks attractive here for a swing long. So this is really good weekly chart support in here right around the 310 area. And that's pretty much where we got. We got down to, let's see, 306. So we pierced through that 310 area, but closing up at 338. That was a really good area of support for cloud software. And you can see the bounce there. Dow transports as well. This another level I gave out Wednesday night. I said 14.2. Watch that area. We got down to 14.133 and a huge move higher off of that. Now kind of resting right below that 200-day moving average there on the daily. Again, a lot of these charts are probably going to need to do some backing and filling if we are to have another leg up. But again, we're going to have to watch for lower highs on these, as that could signal that we may want to roll over. Home builders, another level I gave out Wednesday night. I said 64. That's going to be your area, 100-week moving average. You got this little chop zone right there, that green bar, that breakout bar. That's going to be support, and home builders getting a huge bid off that, a 6-point bid from that 64 handle. So a perfect test there on the home builders. And, you know, still in a weak technical position. This area here is where you broke down. So that is going to be resistance theoretically, but a nice little relief bid there for the home builders. Treasury yields were kind of all over the place. They did get below that 20-day moving average, bounced up on Thursday, and then kind of paused. So you're seeing a little bit of fear subside as bonds did get a bid, you know, on the invasion news as a fear trade. But here's the 30-year as well, kind of pausing today after a big move. The big story for bonds was HYG. So I said earlier in the week that pivot there at 82.22, and really ultimately the 82 handle on HYG was going to need to hold. It did. So again, maybe the market has a little bit of a relief rally in it, with high yield kind of cooling off a little bit there. Let's see. Let's move on here to financials. So XLF hitting that double bottom, getting a bid just like everything else. Broker dealers making higher lows, nice tail candle on Thursday, and putting in a follow-through move on Friday. Take a look at JP Morgan here. Hits the double bottom here, gets a bounce, fills the gap yesterday. Interesting though, on the weekly, we do have a potential inside bar there on JP Morgan. So that red bar there is an inside bar here that we are in. But, you know, it held up for now. It filled that gap a couple weeks ago, defended that double bottom area, so I think it's okay for now. Morgan Stanley had a huge move off the highs, though, earlier this week. So we talked about how it got up to double top and then retraced almost all of that move. Broke below that 90 handle, got a bid, but a little bit of a weak technical position. So you had kind of a fake breakout here on Morgan Stanley, and now it's losing this whole consolidation zone. So could be telling you that Morgan Stanley wants to go lower, but again, maybe it wants to go up and test that 100 handle first. But interesting to see that there on the financials starting to change trend a little bit. Financials have been kind of the stronger link over the last couple of months as the market has sold off, and now maybe that is starting to change just a little bit here. All right, so Energy XLE, another sideways week. We had a reversal, and then kind of just an kind of just stayed inside of that big reversal candle there. Reversed lower yesterday. Again, kind of a max fear thing. So oil did come back in a little bit. We'll look at oil in a second, but you know, some of these energy stocks are cooling off just a little bit. I will say though, on the weekly, you are putting in potentially bullish consolidation. I do think that 20-week moving average needs to catch up to price before it's going to advance, if it is going to. On the monthly, you are into this red bar here. So we'll see what happens. It probably does need to do some backing and filling. It's had such an amazing run off the lows. You know, truly remarkable, really. I do see probably max move in a somewhat near term at 75, but I think it's probably got to, you know, consolidate a little bit here if it's going to move higher. But, you know, bottom line, XLE and energy has held up really well, obviously, with the geopolitical tensions. And if that continues, it's going to hold up. Crude, again, pushed all the way up to $100 a barrel here on WTI, put in a pretty sizable tail candle. So, again, you can see that on the weekly as well, a pretty big topping tail there on the weekly. If crude's going to continue to move higher, I do think it needs to do backing and filling, maybe some type of a pullback, maybe something like that. But again, with geopolitical tensions not showing any signs of slowing down, I don't expect it to necessarily, you know, pull back that much either. The one caveat, the one thing that can really change this is if the Fed essentially raises rates in March and doesn't go back on that. Now, the one thing that may stop that is if we have rising geopolitical tensions. Historically, the Fed does not make monetary decisions, or at least they push back monetary decisions if there's major geopolitical problems going on. So if that does cool off over the next month or so, and the Fed could continue with their rate hike, that could be the only thing that I could see that would put pressure on oil prices. Anyways, moving on to nat gas. I did a quick calculation on this. So you do have a little inside bar here. So you see here's your big bar, and then your inside of that. You could get up to 547. I do have that penciled in. So 547, if this were to play out to the upside, which would essentially take you back to double top. But yeah, nice little move off the lows and a nice bullish pattern there. Finally, nat gas starting to stabilize a little bit and show something of a pattern here. But crazy volatility in this asset over the last really couple of months here. Anyways, moving on to the dollar. Again, I think we got kind of a max fear move on the dollar. You see the same thing on oil and the VIX as well. The VIX, it basically got up to double top before a major reversal. Gold as well, which we'll talk about in a minute. But it does look like we got kind of a max fear move a little bit yesterday. I still think the dollar has another leg up in it, but I think it's still got to do a little bit of work before it's going to break out here. It's clear that that 97.50 area is giving it a little bit of trouble. So if it's going to move higher, it probably needs to consolidate a little bit further. So gold, man, what a move, right? So all the way off the lows and then just straight up to, I mean, 25 points away from 2000, really. The high here was 1976. So basically almost got up to 2000 here, really in one trading day, then came right back in. Whether it was PPT, whether it was paper contracts, whatever it was, you can bet that they probably did not want it to get above 1920. That's the level I talked about, 1919 spot 2. So we do have one more day in the trading month. If it closes above that, I would get really bullish on gold very quickly. Until then, though, I've got kind of a neutral bias towards it. Again, with fear going on right now, it can remain elevated, especially if we get more and more news out of Russia or if things escalate. Taiwan is now, maybe not yet, but they will be in the forefront very soon. So that's something we got to watch for. But again, gold is acting as a fear trade right now, and we'll have to respect it. But humongous move off the highs there. And again, gold does appear to be trading kind of inverse to the market right now because it is a fear trade. So just make note of that. Anyways, moving on to silver. Silver also came back in as well. Got a lot higher than I thought it would. Cut right through that 200 moving average. Pierced this little pivot high here and then came into these pivots. There's a lot of resistance up here. But pulling back off the highs again, if it's going to move higher, it's going to need to do backing and filling. Same thing with platinum. Platinum got up to my target here, 1125, and pulled back sharply. Again, more backing and filling is needed. And palladium, this one disappointed me a little bit because I really liked this weekly pattern. I think it just pushed too prematurely. So now you've got this really nasty tail here on the palladium chart. But, you know, I had a nice move here, and maybe if it bakes in the oven a little bit longer, it can go higher. But interesting, crazy volatility in the metals this week. Copper, not so much, though. Kind of just hanging in here, still inside of this red bar, so potentially setting up for a move lower here on copper if this inside bar were to play out. But it has been on the weekly. It has been inside of this green candle for a very long time. And on the weekly, I guess you can make a case that you're inside of this green candle. So, you know, really just kind of a neutral signal here on copper, pretty much, for the most part. Anyway, all right, so let's flip over to crypto. So I want to talk about Bitcoin a little bit. And this is the chart I've been showing. We'll talk about the weekly in a second, because I've been talking about that the last couple of days. But one of the things that made me feel like we were going to possibly have a bottom in the market earlier this week is you can see that Bitcoin hadn't made a lower low. So even on this this panic move from Thursday, Bitcoin hadn't made a lower low, and neither did Ether. So you're seeing a little bit of outperformance from the risk assets. And I said the same thing about the Russell 2000. The Russell 2000 only made its double bottom, whereas the S&P, the NASDAQ, and the Dow were making lower lows. So you're seeing bullishness, or at least outperformance in risk assets. So that led me to believe that we're probably going to have a bottom, and lo and behold, we did put one in. But I want to show you this on Bitcoin and Ether. Really, you can see the same thing. They're essentially the same chart. But so we have this bearish inside bar right here, and we're inside of that. We also have a micro bullish inside bar inside of the bearish inside bar. So a micro bull pattern and a macro bear pattern. So potentially we could move up here next week if we get some follow through if this pattern plays out. But if you close above 43,544 next week, that would take you potentially much higher on Bitcoin. Same thing with Ether. If you get above the high, which is 3360, If you can close above that, then that would take you higher on Ether. But for right now, if you stay in this red bar, it's just technically you can make a case that it's all bearish chop. But in the meantime, it is holding up. It is outperforming just a little bit. So we'll give it the upside bias for now. Anyways, just to recap everything. So on the spiders near term, you're going to have resistance at this 200 moving average, most likely on the daily. And this is kind of coinciding with where you broke down from. So that's kind of where I would see near term resistance. You did have two really powerful up moves Thursday, Friday. So maybe we have to do some backing and filling first. But this market is not out of the woods by any stretch. This is a nice move. It's a really impressive rally, but that's also very characteristic of a bear market rally. So, there's nothing to say we can't go a lot higher. There's nothing to say this can't be a major bottom that doesn't get taken out for a while. But for the near term, it's a good low. But I would advise you, if you're long right now, protect your positions. Don't get too comfortable here. And if you're short, you want to be taking profits on the way down. I mean, you probably already, time to take profits is already on the way down. Now it's probably too late. But in any case, don't get too bullish, don't get too bearish, and don't overexpose yourself. This is not the market that we had last year. This is a pros market, and you need to be careful trading. Anyways, guys, take care. Come find me on carnivoretrades.com. Come find Jason's Patreon. Awesome service. He's the best in the macro space out there. You guys take care. Give the video a like. Come subscribe to my channel. Subscribe to his channel. I'll talk to you all next week.